Hey guys, New Year is born in new ideas, and this time the new idea consists in the, that not traditional usage of the topological data analysis, which is mostly related with the persistent diagram and barcode, and the best ways of the visualization of the topological data analysis methodology. But as you know, the topological data analysis TDA is mostly used for the machine learning, but this time we will not use methods of the machine learning. We will just try to use abstractions and the ideas of the topological data analysis for our analysis of the LTC-USD cryptocurrency, and to have less noisy information about quotations of this cryptocurrency, we will try to use the simple moving average, which will be based on the weekly data. And this data for the last 5 years, from the beginning of 2018 till the beginning of 2023. And we will try to use 10 days for the beginning. We will try to use 10 periods, 10 weeks data frame. And in this connection, at the beginning, the peaks, we can receive the peaks from this special from SkyPy signal, import find peaks, and try to use it. But we also need not only the local maximums but local minimums for our future researches. In this connection, we need to find local minimums and local maximums, and it's quite easy to find them by the taking results of the week, the local minimum for the simple moving averages exactly. On the weeks when in the previous and the next week the minimums were lower, and the maximum is the situation when the maximum is higher for the previous and last week. It's quite a simple methodology, but when we're analyzing the weekly data, we could not use much more difficult, because you see that the time is cost too much on the cryptocurrency market. So after that, we're receiving this information about them, and we try to visualize it, and we can see that we have some periods when it's quite a noisy and the backside market. And in this connection, this methodology is not giving us the opportunities to receive any kind of profit from it. But sometimes we have the periods when the prices are rising very quickly, and in this connection, the angle speed of the trend is becoming very serious. And in this case, it's given us the good chances to make money, such ones as the periods of the 2 periods during this long-term period of time we can find it. After that, what we can do is just to receive information about the local maximums and local minimums without the 0 points and without the periods when it was not any kind of signals for us, as it was not new local minimums and new local maximums. And what we will try to do is just to analyze the distribution of them exactly using the persistent diagram. And I called it Naïve persistent diagram, because you know that it's just trying to use this methodology. And on the persistent diagram, more closer results of our research, our views to the line, less profitable they are, and more far they are from this line, more profitable they are. So in this connection, we can analyze also Naïve barcode by the difference to analyze it Naïve, because it's a difference for us between the between the local maximums and local minimums, which were, you know, the previous next local minimum again, according to the next local maximum. And you know that if we will try to find these results for the actual figures, I mean that for the in dollars terms, we will find that we can make, for example, if we will trade just with one currency, with one Solana against, oh, it's not Solana, yeah, it's LTC against US dollar, we will receive the profit $404. But it's much more interesting to take a look what will be percentage of this profit, and we will find that this percentage will be here we have the percentage figures, here we have the sorted percentage figures, and we will find that the sorted figures are very interesting because two most profitable periods of the trend on this market is giving us the approximately 90% of all profits. And this connection, you see that if the maximum, if the total profits will be 789%, so without the most profitable position, it will be just 363%. What is we need to do is just, you know, that it's just the difference between local minimums and local maximums, and this connection, the if we will try to find, we can use this point as the entrance point, because you know that we don't know actually that it was local minimum before we will not receive results of the next week. And this connection, it's reasonable to expect that we can open position just on the close prices of the next week, and a close position just on the close prices of the next week after the receiving of the signal. In this case, we can expect that we will lose the portion of our potential profit on during such operations. Just try to imagine that we will lose approximately 5% at average on each opening and closing position. Maybe it's not so big for the cryptocurrency market, and maybe actual figures will be even higher, but we're talking about the cryptocurrency which is not so volatile as, for example, such currencies as the DOG against USD or Waves against USD or something like other ones. But it seems that it's maybe reasonable to expect that 5% will be not so bad expectations for exactly for this cryptocurrency, because you see that during the period of the sideways market, we will lose even less on opening and closing these positions. But during the strong rise, we can expect that the temps of the rising will be much more quicker than 5%. In this case, we can lose more. So the average figure may be close to 5 or 10%, something like that, but it's only researches, and certainly after making more serious research, we will need to find more serious information. So, if you will make this analysis, we will find that, and we will make this expectation for our losses for opening, the price of opening and closing position, we will find that our results will be lower because it was 15 positions with the 15, it seems, yes, 15 periods, and we will lose totally 85% according to our methodology. And we can again visualize this information, that we will find that some of deals will be not profitable, but they will be with losses. So it's just a brief explanation of the new methodology, because it's even not methodology, it's just the point of view which is giving us maybe some kind of ideas about the future usage of this methodology. I hope that this video will be useful for you, and it's not any kind of recommendation for you to make any kind of deals. If we will take a look for the current situation, we will find that currently market becoming in the against it's rising, and according to our methodology, we have currently not the most useful deals, but it's going to be a profitable deal, and we can expect that this will be the profitable deal. And in this case, you know that even we can find that there's some cyclical move when the that some kind of moves 3 signals around zero, with the zero close to zero results. After that, small profit. After that, this deal with small losses, and after that, the deal with a huge profit. Excuse me. In this case, we currently it seems that we can be close to this situation when such a tremendous profits are coming, but it's not expectation. It's just some kind of the that ideas from the visualized information. So thank you very much. Have a good day, have a good trading, and have a good coding. Bye bye.